All right, greetings, scholars. So this serves as a makeup recording again. We just got out of class maybe about 20 minutes ago. I've already done one other recording, so this is the second recording. I just had to, because I forgot to hit record, so I was like, okay, well, I just had to do it again. That happens. Okay. So again, we're back in chapter 8 in our original text, Blitzer Thinking Mathematically on Personal Finance, and this section is section 8.2 on income tax. A few objectives. 1, determine gross income, adjustable gross income, and taxable income. 2, calculate federal income tax. 3, calculate FICA taxes. 4, solve problems involving working students and taxes. So income tax is a percent of your income collected by the government to fund its services and programs. Calculating income tax, determine your adjusted gross income. We're going to come back and use all of this. Adjusted gross income is going to be your gross income minus adjustments. 2, determine your taxable income. Taxable income is going to be your adjusted gross income minus exemptions plus deductions. 3, determine the income tax is going to be the tax computation minus the tax credits. Okay, in this example, we're looking at gross income, adjusted gross income, and taxable income. A single man earned wages of $46,500, received $1,850 in interest from a savings account, received $15,000 in winnings on a television game show, and contributed $2,300 to a tax-deferred savings plan. He's entitled to a personal exemption of $40.50 and a standard deduction of $6,300. The interest on his home mortgage was $6,500, and he paid $2,100 in property taxes and $1,855 in state taxes, and he contributed $3,000 to charity. Determine the man's gross income, determine the man's adjusted gross income, and determine the man's taxable income. So the gross income is just going to be the sum of any money coming in, right? So we are going to do that in green. His gross income. Okay. So let's copy. So any money coming in, we got this. What's easier? So let's copy that. So that's his wages. Interest from a savings account is money earned. Okay. And he received $15,000 in winnings on a game show. Okay. Okay. Hey Google, what's 46,500 plus 1,850 plus 15,000?
46,500 plus 1,850 plus 15,000 is 63,350.
Okay, so we just added up those to generate that. Determine the man's adjusted gross income. So we have to we take his gross income and we deduct his exemptions and deductions. Right? We'll do that. We'll do that in blue. Okay. Let's see where the tax deferred savings plan goes. Tax is part of his adjustments. Oh, wait a minute. Yeah. We're trying to calculate the adjusted gross income, right? Mm-hmm. So that's where the tax deferred savings plan comes into play. Yeah. So then let me see. Right here. I think I got it already. So we're going to deduct this 2,300 from the gross income. So I know it ends in a 50. I think that's 61,050. Okay. And then the taxable income is going to be the adjusted gross income minus the exemptions plus deductions. So we need to identify his exemptions plus deductions. So the exemptions is going to be a fixed amount for yourself, which was $3,200 in 2005, and then the same amount for each dependent. And then the deductions, it says choose the greater of a standard deduction or an itemized deduction, which includes interest on home mortgages, state income tax, property tax, charitable contributions, and medical expenses exceeding 7.5% of adjusted gross income, right? So it says, we'll do that one in purple. Okay. So we need to take his adjusted gross income and deduct. He has a personal exemption, so we have it here. This 4050. Now his standard deduction would be the 6,300, but his itemized deduction, which is these items, his mortgage was 6,500. Property taxes. This is larger than 6,300, so we're going to use this itemized deduction. 1,855 property and state taxes, and he contributed $3,000 to charity. I'm making words up. Charity. I don't even know why. Okay, so we're going to take his adjusted gross income. Let's see, and we're basically going to subtract all those purples, or subtract the sum of the purples. Hey Google, what's 61,050 minus 4050 minus 6,500 minus 2,100 minus 1,855 minus 3,000?
61,050 minus 4,050 minus 6,500 minus 2,100 minus 1,855 minus 3,000 is 43,545.
That looks proper. Okay, I think these are correct, right? 63,350, 6150, and 43,545. 63,350, 6150, and 43,545 is there, right? And they essentially did the same thing that we did. Okay. So then here's our percent in income tax. The table shows tax rate, standard deductions, and exemptions for 4 filing status categories. Okay. We got single, married filing separately, married filing jointly, and then head of household with the rates. And again, this chart is based on your taxable income. Okay, let's see. So calculate the income tax owed by a single woman with no dependents whose gross income adjustments, deduction, and credits are given below. Use the marginal tax rates from the table. Her gross income, okay, so now if we go back, we got a gross income, so then her adjusted gross income, so we got to say the 62,000 minus 4,000 to give us, what is that, 58,000? So let me see. That's like what we had in purple. And then the taxable income, okay. It's not in purple. Yeah, in blue, right? The adjusted gross income and then the taxable income. Let's see if we can get this. Okay, so we got our gross income, our adjusted gross income, which was what we did in blue last time. That's 58,000. Okay. And then her taxable income was her adjusted gross income minus personal exemption plus deductions. Deductions. Let me see if we use the chart. Standard deduction, exemptions per person. Cancel. So, I think the standard deduction and the exemptions, because in the previous one, the guy had that 40/50, right? The personal exemption. Does she have a personal exemption? 40/50 per person, that's fine. And then we need to calculate her itemized deductions to see if it's larger than 6,300, then we need, and which it looks like it is. So then we're going to do that 58. I think the final one was what, purple? 58 minus the 40/50, and then minus the sum of those guys. Let me see. It's going to be 0, 0. Let me see, 9 and 2 is 11. 6 carry the 1. Again, that's a 0. 8, 10, 12, 13. 13, 600. So then her taxable income. Let's see. Hey, Google, what's 58,000 minus 40/50 minus 13,600?
58,000 minus 4,050 minus 13,600 is 40,350.
Oh, I'm not writing that right. That's her taxable income. I think that's right. Let's see if I look on the previous slide. Yeah, 25%, right? 40,350 is her taxable income. So 25%. Let me see. Gross income, we got the 58. Medical expenses cannot deduct. Oh, so we can't deduct that. So okay. In excess of 7.5% of adjusted gross income, which is 4,300. So she didn't have enough medical expenses for that to be a deduction. So 12,100. So instead of 13,600, it's only 12,100. Let's see. Hey Google, what's 58,000 minus 40/50 minus 12,100?
58,000 minus 4,050 minus 12,100 is 41,850.
And I think that still puts her in the 25% tax bracket. Let's see. 41,850. There. Since she is single woman, taxable income is 41,850. She falls in the tax bracket of 25%. That's from the chart. Okay. So then let's go back to the chart real quick, right here. So then, okay. So her tax rate is 25%. Mm-hmm. Okay. This means that she owes 10%. No, that's what I'm looking for, is the 10% on the first 9275 of her taxable income and then 50% on her taxable income between this. Oh, okay. Let's go back to the chart again. Right here, right? So if she falls into the 25% tax bracket, that means 10% for the first 9275 and then 15% for this difference. We got to subtract those, and then 25% for anything over, right? So it should be 0.1 times this number plus 0.15 times this difference plus 0.25 times whatever's over to 37,650. And we're going to see that right think that's what this is, right? Right here. So 10% times the first 9,275 plus 15% times the difference plus 25% times whatever's over that 13,650. We crunch the number and we get this result. Okay, so we substitute this in for the tax computation into the formula. So then her income tax is going to be the tax computation minus her credit to give her this. So therefore, the income tax owed is this, is 5733.75. Okay. Interesting. You know, now that probably would be easier in like a spreadsheet or something of that nature, where you have all these calculations, you put the data in and it'll calculate it for you. In addition to income tax, we are required to pay the federal government, the FICA, Federal Insurance Contribution Act taxes that are used for Social Security and Medicare benefits. Social Security provides payments to eligible retirees, people with health problems, eligible dependents of deceased persons, and disabled citizens. Medicare provides health care coverage mostly to Americans 65 and older. So the employees' rates, the matching rates paid by the employers, and if you're self-employed, okay? If you are not self-employed and earn $150,000, what are your FICA taxes? So then we will pay 7.65% on the first $118,000, and then 1.45% of anything over that. So we would say 0.0756 times that 118,500 plus 0.0145 times our income minus the 118,500. You see it here. Times the first, anything from the first 0.0765 times the 118,500 plus 0.145 times anything over that 118. So we made 150, so we got to say the 150 minus the 118. Crunch the number and we get this amount owed in FICA taxes. You would like to have, so let's look at this example on taxes for a working student. You would like to have extra spending money, so you decide to work part-time at the local gym. The job pays $15 per hour. You work 20 hours a week. Your employer withholds 10% of your gross pay for federal taxes, 7.65%. So man, that's 17% right there. And it's really like 20, you know, and FICA taxes and 3% for state taxes. What is your weekly gross pay? Let me see, 20 hours per week. So the gross pay, $15 an hour times 20 hours. So that would be 30. So is it $300? Looks like that's 3. Let's do this color. $300 every week. Is that right? Because 2 times 15 would be 30, but you got to tack on a 0, so then that's 300. How much is withheld per week for federal taxes? For federal, so 10%, so then that would be $30. How much is withheld per week for the FICA taxes? Hey Google, what's 7.65% of 300?
7.65% of 300 is 22.95.
How much is withheld per week for state taxes? So 3%. Let me see. 10% is 30. 1% is 3. So then what, $9? What is your weekly net pay? Hey Google, what's 300 minus 30 minus 22.95 minus 9?
300 minus 30 minus 22.95 minus 9 is 238.05.
What percent of your gross pay is withheld for taxes? Round to the nearest 10th of a percent. Well, it should be 10, 7, let me see, 20.65. So 20.7%. Okay, let's see. We got a 300, we got 30, 22.95, 9, 23, 238.05. I think we got that as well. And then 20.7%. Okay, not too bad. It didn't take that much longer. I mean, I guess it was about 40 minutes with the 2 sections, but yeah. Okay. All right. And so with that, we're going to end the session here. And from one beautiful mind to another, enjoy the rest of your day.